The fundamentals of financial statements starting a business requires much time commitment and patience. The ultimate goal of most businesses is to be professionally and financially successful in order to show the progress of business operations. Meticulous financial statements must be kept. The steamer communicates economic information about the business to individuals involved in making decisions and judgment. According to the University of Phoenix 2006, an entity's financial statements are the end product of a process that starts with transactions between entity and other organizations and individuals. This simulation Marley started a cookie business in 2017, developed a business plan, and placed people to assist. Marley was concerned she needed someone to maintain the financial accounts for her business. Marley Cookie's financial statement for November and December are reviewed along with a suggestion to expand her operation. The transaction and Marley's financial statements addressed the balance sheet, income statement, and statement. Cash flows reviewed will be a few transactions in the business sheet and income statement. Marley's initial transaction of depositing $80,000 to her account to start her business increased the property. This transaction increased the company's equity and was added to the balance account. The balance sheet is sometimes called the Statements of Financial Position because it summarizes the entity's resources, assets, obligations, liabilities, the owner's claims, owner's equity, kitchen, and office equipment were purchased along with the supplies with these three transactions. She increased her property purchasing, the supplies increased her debt was due. I invited the operation of the business, meaning our obligation of the first sale, increased revenue. This is shown in the income statement. This team will show Marley whether the business of operating at a profit or loss. The income statement can answer every investor's central question. How much money are they making? Or even more important, the income statement can provide a solid basis for forecasting future profits. If Marley was seeking a loan to expand her business, the financial statement can show income in advance. Aunt Marley can in good faith accept a future order from a client. Marley can show this transaction as infant received in advance and a liability unearned revenue during the process of balancing the books, for the income received in advance will be entered as an adjustment. However, one bank is probably less likely to lend Marley the money. Marley may need to seek several sources. The business has been in existence since November and does not give a good overview of the profits and or our losses. A small profit is shown during that time. Hendricks, 2005, provides a following for entrepreneurs after 1 year business startup. Personal savings, friends and family, and bootstrapping suffice to assert many a new enterprise. But as your company grows, its needs for a capital are likely to outstrip those initial funding sources. The good news is that now you track record, you'll be much more attractive to banks, angel investors, and other financial sources. Marley needs a stronger and longer track record of her business performance to strongly negotiate borrowing money after reviewing the simulation of Aunt Marley's cookies from November and December. The following was discovered initial startup with $80,000 increase equity and property. 2. Purchase of kitchen and office equipment, increased property. 3. Office equipment, increased property purchase on credit and shown as a dead nick and that counts payable. 4. She partially set it up debt with cash and decreased her accounts payable. 5. Repaying in advance increased property and decreased cash. 6. From her first sale revenue increased. 7. The credit sale increased accounts receivable and revenue. 8. The credit sale paid in cash, which decreased her accounts payable. 9. Salaries paid decreased expense in the capital. 10. Utilities in the expense decreased in cash. 11. Personal use of cash decreased cash and capital. 12. Insurance decreased by $6,000. Expenses decreased by $500 to cover the premium for the remaining of the year, which the remaining was placed in the unexpired insurance for the next year. 13. In order not a year received increase cash in unearned income. 14. Money borrowed has interest. It is a liability as accrued interest on analyzed interest expense. Financial statements are extremely important in a business. The statement gives a snapshot of the profit or loss. Your quarterly or yearly included are the gross and net sales. Operating expense and profit pre-tax. Profits, taxes payable, net income, after taxes income statements are valuable tools in situations where credit review may be necessary, making a side-by-side comparison. The company's income statement and balance sheet over 2 or more accounting periods makes 800 new trends and spawning emerging problems far easier than looking at customers' financial performance during a single accounting period.